Hi, I'm Jackie Leoto from One Wildlife Advisors, here to talk about investment trends for 2026. The topic I'll address in this video is the Federal Reserve and potential moves that may occur in 2026, especially the coming leadership change and potential rate cuts. So, monetary policy is uncertain as we enter 2026 in some ways, because conceptually, the Fed has to be attentive to inflation, which would commonly mean interest rate hikes. But going into 2026, however, there's another concern for the Fed, which is a weaker job market, which would typically mean rate cuts. So, these two areas may be in conflict when it comes to the Fed cutting rates. And adding complication is the fact that Fed Chair Jerome Powell's term ends in May 2026, and President Trump will be appointing a new Fed chair. Recent news about a Department of Justice investigation into Jerome Powell means that there's even more attention here. And it has been made very clear by President Trump that he's extremely interested in having interest rate cuts. And so it's likely that whoever he appoints will be interested in doing that. But it's important to remember that history shows that the economy has performed well across Fed chairs appointed by both parties. In fact, you may not know this, but Jerome Powell was appointed by President Trump in 2018, and he was reappointed by President Biden in 2022. So this chart shows the federal funds rate, including the trend of monetary policy after the Fed began cutting rates again last September of 2025. Based on the FOMC's summary of economic projections, Fed officials only expect to cut rates once in 2026. However, President Trump is expected to appoint a new Fed chair that favors more rate cuts and is probably more influenced by Trump. So it's likely that the projections on this chart may change, and some folks are talking about a 1% rate cut over the course of the year. You've probably heard the phrase, "don't fight the Fed." Interest rates going down tends to be positive for stocks. But keep in mind, short-term speculation about Fed decisions is unlikely to improve long-term investment outcomes. And that leads us to our conclusion. Uncertainty, such as the uncertainty around rate cuts and the Fed chair, can lead to hesitancy and make it difficult to decide what to do with our investments. Instead of focusing on the short term, it's important to remember that different Fed chairs, nominated by presidents of each party, have presided over steady economic growth over the past several decades.